So, hello, I'm here with Katia Green with Location Real Estate.
Hello, Eileen. How are you?
I'm doing excellent, in yourself?
I'm doing well. I'm doing well. I'm excited about our live event, our Q&A live. So I'm excited to get some information out there and talk to our people and give them some information and get them to the closing table.
Absolutely, absolutely. And it's such a great time to come together and put out this information because a lot of people are very confused right now. Is it a good time to buy? Should they wait? So it's good that we're getting this out to the public.
Right. So just a little bit about myself. I'll do a quick introduction. I'm Kathia Green, and I'm a local South Florida realtor. I primarily work in the Tri-County area, Miami-Dade, Broward County, Palm Beach. I'm with Location Real Estate. I've been in real estate since 2014, and I work with buyers and sellers. I also do, besides residential real estate, I'm also a commercial realtor as well. So I can provide investors leases and things like that with on the commercial side. um, I've been working with first time home buyers, sellers, relocations, a lot of new construction homes as well, fixer uppers, people that are trying to the 55 plus community lifestyle, people that are trying to move into that area, as well as investors that are buying at fix and flips and multi-unit properties like duplexes, quadplexes, a small apartment building. So all of that, I'm available to help with all of that.
That's amazing. That's good. And tell me, what made you want to get into the real estate business?
So I do several jobs. I'm also a writer. I write proposals and grants,
Okay.
particularly for the architecture, engineering, and construction community. And I've been doing that for over 20 years. But I started thinking about, in my older years, what could I do to still make money?
Mhm.
And real estate was one of those things. And I have a very good friend of mine. The two of us have we had the same talk. Like, what do we do that we can still make money um, at any age? And real estate was that. And so, and it was just also, I was interested in investing in the area. And when I started looking at that, I saw an opportunity to help other people navigate the real estate market. And so I decided to get my license. And so there we are.
Good, good for you. And with the market going on the way that it is right now, what are some of the things that you're seeing? If you're a buyer right now, what do you suggest? A brand new first-time home buyer coming out into the market, what do you suggest for them when you have your first consultation with them?
My first consultation is I do a buyer's intake to kind of get some information from them. Who are the buyers? Is it going to be just them? Will there be someone else on the loan? What do they have any money saved up? How long have they been on their job? Do they happen to know what their credit score looks like? And also, I usually ask them, is there anything that they can think of that would hinder them closing? For example, do they think that their job is in jeopardy? Are they thinking of buying a new car in the near future?
Very
Is
important,
all
right?
those things are important, right?
You
And
don't want
then
to
I tell
find
them
that out later in the
exactly,
process.
exactly. Um, you know, Also, it's been a lot of these communities have HOAs that require a pre-approval. And I ask that question because there may be something in their background that may cause them to get a denial from the HOA. And I've had that happen
Wow.
where we get all the way to almost closing and HOA says they pulled up their background, their criminal record, and there was something there that stopped them from being able to buy the home. So if I know that in advance, I know how to work around that challenge in advance.
And
So
I'm glad that
that's
you brought that up because a lot of people don't think about that. They just think, I'm going to get the loan. I need to get a pre-approval. I have a pre-approval letter, so let me start working with Katia so we can go out and start looking at homes. But they don't look at the background that if it's an association and then HOA has
exactly.
to approve you, these are things that you should let your realtor or lender know. And it's not
Yeah.
because we're very nosy and we want to be in your business. No, a lot of people
No,
do
for real,
think
that's what they think.
they think that we want to be nosy, and it's not that. It's just we want to guide you in the best way possible. So the more honest you are, with your background, with your
Exactly.
credit, with your expenses, whatever it may be, with your job. Because if not, we find we are eventually everything comes out
It
into
comes out.
it comes out.
Yeah.
So it's
Since you
better.
brought that up, I want to bring up but before we do that, I want to back up a little bit. I did my
Mhm.
introduction, but we didn't do yours.
You're right.
And then we'll come back to that question.
So I am Eileen Garcia. I work with Edge Home Finance. We're mortgage brokers, and I've been doing this now. This will be my 23rd year in the business. Thank you. And we specialize in all types of loans. Your FHA, conventional, VA, USDA, all the way to reverse mortgage, investor loans, DSCR, bank statement loans, no income loans with 20% down. So we have a huge suite of products to offer any buyer pretty much.
And we'll definitely talk about all of the options available going to that. So going back to, thank you for that,
Of
and thank
course.
you again for agreeing to do this with me. I'm really excited about our series. I think it's going to be very helpful for people once we kind of get more people involved, and then we're definitely going to share the recording and let them know the information that we presented here today. So one of the going back to what you said about being fully transparent, having clients being fully transparent and that we're not being nosy. We're licensed professionals,
Correct.
which
Yes.
means there's an ethic behavior and ethic responsibilities that we have in order to keep our licenses. And a lot of times people don't realize that. So information that we're given has to be kept confidential and kept safe. So I'm not going to go and tell people, oh, guess how much Aline is making per her annual salary or her credit scores in the dump. I don't do that. And so that's one of the things that I like to tell people. But also, too, they feel like they can go and do the home purchase, even sellers, too, that they don't need an agent. And it goes back to there's a long list of things that are associated with buying a home and selling a home. And you really need a professional on your side to navigate all of the challenges, like the one I talked about, where the HOA denies your approval because something showed up in your background. Going back to that example, I was able to fix it. What I did was I filed a dispute, and we were able to fix that, and they were able to get the approval. But now they had that left a bad taste in their mouth. And they didn't want to live there anymore. So
That happens,
it
sometimes
happens.
that happens
Yeah.
and that's okay. You move on, but I think that foreseeing certain issues up front is extremely, extremely important. I
And
know
even another
for
thing is like, for example, let's say a home seller,
Mhm.
when we asked about transparency, when I asked them, they say, oh, we converted our garage. And I say, was that permitted?
Yes. Yes, very
Because if it's
important.
not, we're going to have a hard time selling that house
Yeah.
with as the fourth bedroom. So I need to
Mhm.
know that in advance. And if I don't know, it's going to come up. And now on the back end, after we're 30 days in or 45 days in, now I've got to go down to the city and have a conversation with the zoning department.
Yes, absolutely, absolutely.
I had
And
a
now you
client where
don't
he
have
had to
clear
knock
title.
down that addition in order to sell the house,
Oh, wow.
which meant he had to hire an architect, he had to hire a general contractor, he had to pay the workers to demolish that. And I was able to save the sale. But again, but what happened with that particular client, their title company, when they bought the house, there wasn't due diligence on that end because he bought the house with that addition already there. So he ended up inheriting that problem. But those are the reasons, again, why we need professionals on our team.
And
So,
that now that you mention that, that's extremely common. That people will buy homes, especially in the South Florida area. They
yeah,
will buy homes and they come with efficiencies that they bought it with
right.
that, or they'll have some type of I just closed one, same issue. The seller bought the property as is, and then the buyer had to end up, they had to close a permit. And the buyer ended up helping her because she was an elderly lady. She didn't know how to go to the city. And the
Right.
buyer actually got involved along with the realtor. And
Yep.
it was something very simple outside the house, something about the washer and dryer. And I guess the
Yeah.
way, the position of where they had the way it was done, it wasn't done correctly. So they
Yeah.
had a small violation, and they fixed it. They were able to fix it. But again, the seller bought the property that way.
Yeah, and I think that's one of the topics that we could talk about in one of our future lives is
Hmm.
just the team that you need in order to close a deal and the role that each person plays in the transaction. You know, home inspections and your title company and your, you know, working with the right, even insurance, finding shopping for home insurance sometimes. Certain, you know, if it's an older roof, one insurance company might not insure the home, and then we've got to help them, you know, find a insurance person that will insure the. So that's why it goes back to there's so many steps and issues that go along with that process that you really need a professional. And for me, what I do is I tell people when you work with me, you're not just working with Kathia Green, you're working with my team. And I'm
Correct.
very particular about who I work with because if I send somebody to you and they come back to me and say, "Oh, Eileen was horrible. She was so this or that," it's a reflection on
A
me.
reflection on you,
You know,
correct?
so I'm very, very particular about my team. And I'm very protective of my clients
And as well,
to
you
make
should
sure,
be correct.
yeah, yeah, to
Yes.
make sure that they're taken care of. And I'm not one of those agents that just disappears because I'm even friends with a lot of people that I've closed with. You know, I check in on their birthdays and they invite me to lunch or, you know, just different things like that, just to kind of make sure because I become involved in your life for a set period of time. You know, sometimes it's a year before we can get you to closing table for various reasons, if not more. So yeah.
Yeah, we
So
go very deep in with customers, and they become part of you become part of their family, just like they become part of
right,
yours, because
right,
sometimes, like you say, you get a customer today, let's go, we're ready to go. Or you can get a customer who needs help with their credit. We might need to fix a few things on their credit
yep,
before they're ready to go, or they might
yep,
need to save a little bit more for down payment before they're ready to
right,
go.
right.
Or they might be self-employed and they haven't filed taxes in the last year and might need help with that as well. So putting them in the right situation, it takes
Right.
time. It can take
It
time.
takes time.
It takes
Yep.
time, and
And
you have to
holding
have
them
patience.
accountable, saying, hey, you know, we agreed that by next week you would do X, Y, and Z. Have you done that? You know,
Yes.
and then the next step, because that's the other thing, is a lot of hand holding because it can be very over. I find that the overarching theme with a lot of my buyers has been they feel overwhelmed with
Yes.
all of the things that are required to get them to keys in their hand.
Yes.
And so it's one of those things of I tell people, you know, how do you eat a steak one bite at a time? You don't shove the whole steak in your mouth. So buying a home is that steak. So you cut it up into pieces and you know, we attack one thing at a time. And then we also deal with the challenges one at a time as well. And that's just kind of, but that's the feeling. And a lot of times that overwhelming feeling makes them want to just give up. I say, I don't
But
want to do it. I'm
it
just going to
can
stay
be
where I'm
very
at.
overwhelming.
Yeah. Yes.
Definitely, buying it. First of all, it's probably one of the biggest purchases that you're ever going to make.
Absolutely.
Buying a home, it's the biggest investment that
And
you're
it's a
going to make.
long commitment. 30 years scares people.
Yes, yes, absolutely, absolutely. But it doesn't have to be scary when you work with the right team. It doesn't
Right.
have to be scary. I think if you work with a team that's very transparent,
Yep.
tells you upfront what is needed, and analyzes the whole situation for you, and does a buyer's consultation and just go step by step on this is what needs to be done.
Yep.
Or even if you're ready to go right now, let's do a buyer consultation. This is what your numbers will look like. This is what you're pre-approved for.
Yep.
Based off this is what your numbers will look like. Or if you have to tell them, based off your credit report, we have to fix certain things. But I believe that transparency and everybody getting on the same page,
Right.
whether it's the customer, it's the buyer, it's the seller, it's the realtor, and it's also the lender. Everybody should be on the same page.
On the same page. Yeah. So while we're waiting for people to join us, has anyone joined us?
No, not yet.
No? Okay. So I'm just going to throw out some questions that I usually get, and then we can do the same, throw out some questions, and we're just going to answer the questions. So
Okay.
the number one question that I get asked is it a good time to buy a home in this current market rates of where they are? And I tell them, I'm like, should they wait until mortgage rates drop? And I say to them, waiting always costs you more,
Correct.
is my generic answer. And so we look further into kind of where they are. But I'm like, if you buy something now, you can start building equity.
Yep.
It doesn't have to be the exact thing that you wanted, but start with something and then let's revisit in a year or two or three and see how we can get you into, but at least getting started. So I'm going to present that same question to you. What
I
should they do?
tell people it is always a great time to buy. There is nowhere where you can invest your money and it can grow and appreciate faster than in real estate. People say, oh, the interest rates are high. I personally don't find interest rates high. When I first got into the business, interest rates were at 9%, adjustable rate mortgages. Yes, the property was lower. Yes, sales prices were lower. That is correct. And now we're dealing, especially in South Florida, we're dealing with higher insurance, higher taxes, and I
Mhm.
completely understand that. But the homes are still going to appreciate.
Right.
And when you have a market like we currently have today, it's June 16th, 2025. And when you have a market like this, the sellers are willing to work with the buyers. So this is not, I mean, I'm not going to tell you that there's not multiple offer situations. There could be, but we're not seeing what we saw in COVID times where
Right.
people were
That
in
was a whole
multiple,
different animal.
a completely different, and people were overbidding on homes by
Hmm.
50,000, a hundred
Yeah.
thousand,
Yeah.
multiple offers. You're talking about every contract that is coming in right now has seller concessions, meaning the seller is willing to give money to help you purchase as a buyer, to help you purchase their house. They
Yeah.
have to set themselves apart. And by doing this, they're allowing you to use that money either to do seller to pay for your closing costs or even to do buy downs, which that's
Right.
something we can get into that helps your rate go down, keep your payment lower. So we
Right.
can get into that in another segment with that. But is it a good time to buy? It's always a good time to
Always
buy.
a good time to buy. Yeah. That's the same thing that I tell people. And then also I want to piggyback on something that you said is a lot of times when you have the buyer's market, seller's market, you've got this competition of, you know, they're working against each other and they really should be working together. And that's usually when you get the better deals and, everyone's happy. Where,
Right.
sellers working with the buyers, you give a little, I give a little, you take a little, you take, and that's what makes the best deals. And I think it goes back to just teaching people about the real estate transaction in the markets. We're not enemies. We work together, for a seller to seller's home and a buyer to buy the home. We have to
Correct.
work together. Same thing with sellers agents and buyers agents. We're not supposed to be enemies. We're supposed to be working together,
It's a team. It's a
so
team effort
it's a
amongst
team.
everybody,
Exactly.
whether
It's
it's the
very
title
collaborative.
company. Yes, when you go into a transaction, it is a team effort.
Absolutely.
From the, like you
Absolutely.
said, it starts off with, whether they go straight to the realtor because they want to buy a house, the realtor will refer them to a lender, or if it's the other way around, they go straight to the lender and then the lender refers them to a realtor. It's a team effort.
It's a
Then the
team
realtor
effort.
will pick the title company that they want to work with, whoever they feel comfortable with, that helps them as a team, and everybody has to just get on the same page. The
On the same
insurance
page.
agents
Right.
shopping for different, you have relationships with different insurance agents to help people shop for insurance. It's just like shopping for a car, is what I tell people. I know it's
Yep.
the biggest purchase that you're ever going to make, but just think about it. The insurance that you're going to get on your property is like
Yep.
if you were shopping for insurance for your car. You just have to make the best decision, which will make sense for you.
Yeah. And even after you own your home, I still shop for my insurance every year. As a matter of fact, I have to remember to do that before the end of this month.
Yes,
Every year. No, I shop my homeowner's insurance every year to try to get the best rate because you just have to.
you
Um,
do.
I have a two-part question for you.
Yes.
The first part is the difference between, well, I tell everyone after I get their initial buyer's intake and I kind of get their story, and I tell them, now we need to get you a pre-approval.
Okay.
But people sometimes you hear pre-qualification and you hear pre-approval. So tell us the difference between a pre-approval letter and a pre-qualification letter.
Okay, so a pre-qualification letter pretty much is I ask you for documents. I will ask you for, let's say we're going to try to go conventional, FHA, and I'm going to ask you, or VA, I'm going to ask you for the last 2 years of your taxes, your last two pay stubs, last 2 months bank statements, and your government issued ID. In that moment, I do what's called a pre-qualification. I ask you, I look at your income. I ask you what's on your credit. We don't have to run the credit for me to give you an idea of what you can qualify for. Because a lot of people come to me and tell me, can I just have an idea? That is
Right.
what I consider a pre-qualification.
Right.
Now, a pre-approval is where I put everything in writing for you. It's on our letterhead and it says, Mr. Buyer is approved to purchase at this amount, whether it's a $500,000 sales price, giving 20% down, or doing a down payment assistance. All this is listed on a pre-approval letter so that when you work with your buyer and you're presenting this, the seller knows exactly what type of financing they're getting.
Exactly.
So the seller is just seeing this letter. It's just a pre-approval letter with the basics on it. But meanwhile, when I sit with the customer, I go over all the numbers with them. Even if we don't have a property, I said, okay, you're approved for this much, and this is how much your payment is going to be. This is how much your rate is going to be. Today's rate, because rates
Today's rate,
do
right.
change daily and sometimes multiple times a day, especially in this environment. So it's very important that people understand that you
Right.
could have gotten a rate yesterday, and today it could be either a higher rate or a lower rate because
Right.
we are in a very sensitive rate environment.
Right. And
But
that's where
that,
the frustration comes in for a lot of buyers of just being unsure. So, and I tell people, because like I said, I always ask for a pre-approval.
mhm,
And I tell them your pre-approval is your buying power,
yep.
is how I present it to them. So thank you for that. So the second part of that question is you've got lenders, mortgage brokers, loan officers, credit unions, banks, et cetera, et cetera. Buyers want to know, where should I start to get financing for my home, and what's the difference between these different entities?
Okay. So all of them are great. I don't like to step on anybody's toes. And I've been on the retail side. I've worked for big banks in the past, and now I'm in the broker side, and I did start my career in the broker side. I love the broker world. So I might be biased there. The reason that I like the broker world is because of the options that you have. We always try to find a solution. We're not a bank that's very cookie cutter and everybody has to fit a specific mold like a big box bank. Sometimes you walk into a big box bank, you have excellent credit, but you don't have sufficient income to purchase. Well, guess what? When you come to a broker, the broker can say, we do have this program with your credit score. You can qualify for a non-QM, which is a non-traditional mortgage. And you can do it with bank statements, or if you're an investor and you want to buy with a DSCR program, we don't require income on a DSCR program. A lot of the big box lenders, which is your local banks, don't offer non-QM.
Mm-hmm.
So I think it's also very important. Another reason that I think is very important is we had a conventional loan, go through a specific lender, and the appraisal came in low. And even though we tried to rebuttal this appraisal with comps, the appraiser was not budging. Now remember, we cannot control, nor the realtor nor myself can control the appraisal's opinion. It's an opinion of value. But as a broker, I can change banks and we can order a brand new appraisal. You can do this on a conventional loan and you can do this on a non-QM loan. You cannot do this on an FHA loan because the appraisal sticks with the property.
It sticks with the property.
So for me, I like to have solutions available to me. So I'm always going to tell you, go with the broker.
Yeah, that's what I do. Is I always, like I said, when I refer clients to a broker, you can go wherever you want, but I
Hmm.
tell them this is who I'd like to work with because I can call Eileen down the road and say, Eileen, we run into a snag.
Yes.
And Eileen can say, because I've got a relationship with you.
Yeah.
I don't have a relationship with big box banks.
Yeah. Hmm.
Or I might. It just depends. But I have that relationship. And then you can start pulling tools out of your toolbox, just like I can pull tools out of my toolbox to help get that person to closing. And I think that's one of the things, is just trying to get people to understand, working with professionals. We've got tools, we've got experience, we've got people behind us that can address a lot of the challenges that often come up. Is they're not unique challenges. It's often, there's life is very dynamic and things happen. So we have to be ready and have resources available to fix those issues. So I just wanted to clear that up for people, that because I get that a lot of time. People say, well, I work with my credit union. I'm like, check with them, definitely.
Yes.
And then when they
Absolutely.
come back, exactly, and then they'll give me their pre-approval, and there's a lot of restrictions and things on there that they can't do.
Yeah.
And so we have to go back and revisit.
I think going to a credit union is a great idea. I think a lot of people have bought successfully with credit unions, so I
Right.
don't knock it. I think if you're
No, I don't
very,
either.
yeah, I think if you're very A paper, great credit scores,
Right.
your W-2s are in line, your work, I think the credit unions are great. I really do, especially if you already have a relationship with them. But I also think, sometimes some homes don't fit the mold either. So you have to find that happy median, and I really like the fact that we are solution based and we're
Yeah.
able to shop around. We have over 100 lenders. Normally we work with like probably a handful, but sometimes you just need that one lender, because that one lender is the one. Like we have a lender, actually we have two lenders that'll do 20% down, no income for a primary residence. That's not something common that you can walk into any bank and get.
Right.
So you just always have to try to find these solutions. And we do also offer these lenders offer down payment assistance programs as well.
Exactly.
So it's
Exactly.
just looking to see what the client needs. Everybody
Yeah.
doesn't have the same financial need.
Right.
Everybody doesn't have the same credit score. And
Right.
everybody's needs are different,
Yeah, and
and
the
it's
ultimate goal is
tailoring.
we want to get them into a new home. So,
Yes.
and that's the thing.
Hmm.
So yeah, and we just really do want them to at least provide us with the right information, so that you and I can get them into the right program and get them into the right spaces to get to closing. Um, do you want to take the next question, or you want me to pose the next one?
It's completely up to you. One of the things that I did want to ask you is, in the market in South Florida, what are some of the things that you're seeing that the buyers are mostly asking for?
The buyers are usually not realistic about what they can buy. And that's one of the biggest challenges that I find, is just managing expectations. A lot of times they will think that they will get approved for a higher amount, and their feelings are hurt when that approval comes in lower.
Yes,
And so let's say they were thinking they could, look in the 500,000 range, and we've got to start looking in the 350 range.
correct.
And it's not just the 350 range, because I tell them it's not just about the price of the home. We've got to look at the property taxes in that neighborhood. We've got to look at the HOA, because that can
Correct.
knock you out of your pre-approval. So it's not just, oh, there's this nice house that I found for 350,000, but there's a $400 a month HOA fee on top of that,
Yes.
or $12,000 in property taxes. That's going to knock you out. So there's all of those things. So it's just like managing expectations, and then going back to, they wanted a 4-bedroom, 3-bath with a pool on a lake.
Do
Like,
you
no,
think that
I'm sorry.
happens? Do you think that the reason that happens, because I notice that a lot too, and it's just that people don't know when they're getting pre-approved. They're not supposed to know. That's our job to educate. But do you think it happens because, especially in South Florida, and the reason, I know you work the South Florida market, so that's why we're concentrating a lot and saying South
Mhm.
Florida. But I have a lot of people, when I tell them they wanted a $500,000 home, and like you said, they got approved for 350. I find that a lot of them come back and say, but how can that be? I pay rent and I pay $4,500 in rent. And I think that's where the misconception is, that people think because they pay that much in rent that they can get approved for a mortgage of that 4,000 or
Yeah, I don't think they
$5,000.
understand how the mortgage pre-approval process works. What is, all of the factors that are considered. Um, I tell people all the time, you may have an 800 credit score, but you're making $35,000 a year. Or you've got someone that makes $250,000 a year, but they've got a 580 credit score. So it's, or they haven't been on their job. They've only been on their job for, 90 days or less than a year, or, they've had several career changes in a short period of time. So there's a lot of factors that they're not thinking of when it comes to that. So I think that's the first shocker that a lot of them get, is when I send them to the loan officer and those numbers come back and they're like, whoa.
Yes. Yes.
And then the second part of that is, because we're in the South Florida market, property values are very high, where for $500,000 you can get a mansion in Texas or in some parts of Atlanta, Georgia.
Mm-hmm.
But in
Absolutely.
South Florida, you're not going to get, you'll be lucky if you get a 1,800 square foot 3-bedroom house on a 0 lot line.
Yeah.
So it's one of those things. And I tell people, in Florida, you're not necessarily paying for the brick and mortar. You're paying for the zip code.
Yes.
You're paying for the sunshine. You're paying for the proximity to the beaches.
Yeah.
So that's what you're looking at. So, and once they wrap their head around that, and just property values. And then the other part of it too is just, like we talked about with the insurance, with what's happening with the hurricanes and the flooding, and, these flood zones being readjusted, where, I'm all the way west and now we have to carry flood insurance.
Because the map got readjusted, the FEMA map got
Exactly.
readjusted for you. Yes, a lot of
Exactly. I
people
never
don't
had to carry
understand
flood
that.
insurance, and now I
Yes.
do.
Did your lender send you a letter?
Yes.
So I get called a
Yes.
lot, and I ask you this because it is very common to start off with no flood insurance, and then FEMA does readjust the map.
Yep.
They send an update to your current whoever
Yep.
you're paying your mortgage to, your servicer, and then they receive a letter. And I
Yep.
did your loan a year ago, 2 years ago, and I get a call saying, "Hi, I thought I wasn't in a flood zone." So it's very important that people understand it has nothing to do with the bank. It has nothing to
Right.
do with me or the realtor. It has to do with the
Right.
fact that FEMA themselves have done a new flood map, and now
A
your
new flood
property
map. And that's all, that's a whole different conversation, but
completely, yes,
our weather,
yeah.
you know, global warming is an issue, and that's kind of what's happening. And so there's that. But managing expectations is just really one of the things. And some of the homes that are out here, a lot of people are not taking care of their homes the way that they should. So you have a house that's listed, for 425,000, and when you walk in, it needs a new roof, it needs windows, it needs a new kitchen, there are no upgrades, or you're like, well, why is it costing this much? So on top of buying this house, at some point you're going to need to update your home. So I'm finding that to be a challenge as well, where the whole move-in ready concept is not as available as most people think in their price point.
How do you handle that with the buyer that walks in and says, you know, I have to redo this kitchen to my liking. It's gonna pass for the loan, and it's definitely gonna pass for the appraisal. Appliances are there, but it's an outdated kitchen. Let's say the house is from 1998 and they've never done the kitchen or the bathrooms.
Right.
How do you handle that with the buyer?
Right. So what I tell them is, as long as I always ask my buyers, what are your deal breakers?
Mhm.
And if, as long as this house checks off all your boxes and it doesn't, your deal breakers are off the table, then look at it as, could you come in and cook a meal in this kitchen the way that it is right now and not feel icky?
I like that. Yes. Yes.
Could you take a shower in this bathroom the way that it is right now and not feel?
Yes.
And if the answer is yes, then buy the house, do a really great cleanup, throw some paint, and things like that. And then you create a budget for updating your kitchen and your bathrooms. And then you've got your holidays where, your brand smart bundle, you know, your refrigerator, stove, dishwasher combo, and you do it that way. And you start there. And also, it goes back to the team. I've got home improvement resources as well. Say, hey, I can connect you with a kitchen remodeler or a bathroom, handyman and things like that to help you update your home as you need to. But the first thing is get into the house. Is it a safe neighborhood? Is it near the school you need to be to? Is the commute to work okay? Is the space there for your family? Is there a yard for your dogs if that's necessary? The other things are cosmetic. It can
Correct.
be fixed. So
Yeah.
that's kind of how I tell them. But if it's and also safety, make sure there's not a safety issue because I make sure the home is well, we know that it
It
wouldn't
won't
pass
pass
inspection anyway.
financing. Yes,
Right,
if the home
right,
is it has a safety issue. Let's say you walk in and you notice there's a hole in the roof. It's not going to pass financing.
right,
That's not safe to live in.
right.
Um, so that's very important to note as well because I do get a lot of calls from people saying, "Oh, but I'm a handyman and I want to buy for the first time, but I want to fix her up." Or that sounds great in theory, but if you need a home loan and you're doing, let's say, 3.5 FHA, it's not going to pass if that house has a
Right.
hole and there's clearly water coming in
Or
you know
electrical wires hanging down.
that's a big one. Even for
Yeah,
insurance, that's a big one. Sometimes you
yeah,
send out these inspections and they'll tell you there's an issue with either the electrical panel, or there's wires hanging out, and sometimes the sellers need to address that, or the buyer cannot insure this property.
absolutely. And that's when I have sellers before I take their listing, I really do encourage them, let's go ahead and pay for a home inspection so that you know in advance what issues may pop up that's going to stop a buyer from buying your home. Not that the buyer doesn't want to buy your home, they can't get the loan.
Correct.
So any buyer that comes, unless they're buying cash, any buyer that's coming with financing is going to run into this same issue. So you're going to have to fix it. So let's know in advance, you know, and maybe it's not the right time to put your house on the market. Let's go ahead and, revisit this in 90 days to give you time to fix that, leak or that electrical issue or the crack in the foundation or whatever the case may be. And that's a small price to pay, 500, 750, or whatever the cost is, because it's based on your square footage of your home and what inspections that you're asking for. But at least to know in advance. And sometimes too, that's if we attach part of the inspection to the listing, that's an incentive for the buyer to already know in advance, hey, this seller is being forthright about the conditions of this home, and you will get more interest in that property as well. So it goes back to just transparency of just giving information to the community.
I love that you said that. A lot of realtors don't do that upfront. And then you get towards the middle of the transaction, the end of the transaction, and something that looked like a very simple
Yeah.
transaction, 15 days going in,
Yep.
we now have a problem. So I love
Yeah.
that you do that, and the transparency, I think that's huge. That's also something that I coach a lot of realtors on when they're taking a listing for condos. Be very transparent with this condo. Be very
Yeah.
transparent with the association.
Yeah.
Let people know what's going on. Is there an assessment coming? How much One of the big things that we're finding, and I'm sorry that I'm going off topic and
No,
going
you're not.
into so going into the condos, just because again we are in South Florida and that's a big market here, the condo market. I
Mhm.
tell people you need to be extremely transparent. Get the insurance up front. The owner can request the insurance from the association. You can put
Yeah.
this in the MLS where it shows exactly what type of coverage the master insurance holds, which makes it easier for the lender when they're looking, where should I place this loan?
Exactly. The insurance, the budget,
The
the
budget,
assessments, yes,
yes,
all of that. I
yes,
find a lot of times, I'm not throwing my colleagues under the bus, but it does, like, going back to that collaborative environment where we're all working together, is information is king. That's
yes.
currency, information.
Mhm.
And so, I look at these listings, and especially with there's no, I don't even know who the condo property manager is. Put that in as so that I can reach out to them. The budget that was approved, are there assessments, are there any of those things are helpful. The insurance, like you said, all of those things are helpful. and just trying to get buyers to be interested in that property, or agents, because we're the gatekeepers. We're the ones
Yes.
that say, hey, this property is available, let's go see it, it meets your search criteria. And if it doesn't, it'll never see the light of day. We just won't show it.
And you need to know, as a buyer's agent, as a listing agent, as a lender, you're guiding. People don't know when they're getting into condos. They don't know
Yep.
everything that goes into getting a condo
Yep.
finance. So I say, please upload the budget like you mentioned, upload the insurance. We need to see the deductible. If the deductible on those insurance are more than 5%, which is something that we're seeing a lot right now in South Florida, we're seeing a lot of master insurances upping the deductible to 10%. And that's basically just so the insurance is cheaper for the homeowner, but at the same time, it affects the buyer because now you can't get a traditional Fannie Mae or an
Right.
FHA loan on this property because the
Right.
deductible is more than the allowed 5%. If we know that up front, we can navigate that easier.
Exactly.
Um,
Exactly.
and again, the assessments, it's the seller going to pay for the assessment at the time of closing? Is the buyer? Because this is going to affect their debt to income ratio. This is now,
Absolutely.
we're thinking the association is 150, but you add in another assessment and now another $150, and you're looking at an association now of $300.
Exactly. Exactly.
So I urge people, I mean, if you take anything away from this recording that we're doing today, just please be as transparent as possible when it comes to the condos. Ask the questions, get the seller involved. If the association it doesn't speak to you, they have to by law speak to the owner,
The
which is
owner.
the
Okay.
seller.
So we've got 10 minutes left. And
Mhm.
what I want to ask, the big question for home buyers, for some home buyers, traditional income and credit documentation can be a challenge.
Mhm.
For example, independent business owners who get 1099 income, or like he had mentioned before, maybe didn't file their taxes, or there's not enough down payment, um, the length of time at work, it's all of these things. But I know that, like you mentioned, there's different lenders and different programs. Can you just touch on the different programs? And right now, what is, I guess, the hot topic or the hot loan program that's available for most people, or something that they may not have known that's available for buyers?
One of the things that we've seen a lot this year is non-QM. We're seeing that a lot. We're seeing self-employed buyers coming in. They're not claiming everything on their taxes because they have a lot of write-offs. So what we're doing is we're exploring different options, whether it be a P&L loan, a profit and loss loan. Basically, those loans require you to have at least a minimum of 680 credit score. Sometimes some will let you go down a little bit more. The lower your credit, so if you're looking at
Mhm.
680, 640, the higher your down payment.
Right.
Anything over 700, 720 credit score, the minimum down payment on those are 10%. Non-QM loans work with minimum, they look at your credit score, and that's how they determine how much your down payment is going to be.
Mhm.
So I have a self-employed borrower. He has 700 credit score. We can either do a bank statement loan, which will take 12 months of the business or personal, and we average out the deposits. Now, those do not have down payment assistance. So basically, this person is coming in with a full 10% plus their closing cost. These loans do allow seller contribution, they allow
Okay.
gifts. Some of them just want to see that 5% of the money being brought to the table is already in the bank, it's their own funds.
Mm-hmm.
So that's, again, then we have DSCR. You're an investor, you own a home, you want to buy a second property for investment, whether it's outside of South Florida in another state, we can do that. There's no income on those loans. The income comes from the house being able to cash flow. So meaning if your principal, interest, taxes, insurance, and if it has an association, everything comes out to, and just simple numbers, $1,000. The appraiser needs to state that this home can be rented for $1,000 or more. So those are programs that we're using. They've become very popular in the last couple of years. And of course, we have your down payment assistance programs. We
Right. And we'll
do,
touch on all of those in future. But I
yes,
wanted to ask you about is that the 3-2-1 buy down? Is that what that's called?
correct,
Two
yes.
one, what is it called?
You have several. You have 3-to-1 buy down, you have a 2-1 buy down, and just a 1 year buy down. It just
Okay.
depends how much money the seller is contributing. That's where
Okay,
we
can you
get.
talk about those and what does that mean for the buyer?
So let's say that you have, and again, this people can use this for their listing. If you're a listing agent and you have a property on the market that's not moving, the first reaction that everybody runs to is let's lower the price. I tell people instead of lowering the price, let's try to do a seller concession, meaning the seller will give, let's say, $10,000, whatever it is. We do the numbers. We actually have a calculator for this. We do the numbers. And if the seller is willing to give, let's say, $10,000, that can possibly help the customer buy down the rate, whether it's a permanent buy down or you can use it to have a lower payment. So let's say you get approved with a 6.5 and you get enough money for a 3 year buy down. So the first year, your rate would be at a 4.875. The second year, your rate would be at 5.875. So every year just goes up 1 point,
That's a little bit.
but you have to qualify with the 6.875. But it's
Okay.
attractive to buyers, especially when you're first starting and you're very nervous. Some of these buyers are saving $500 to $800 a month doing a
Yeah.
2-1 buy down or a
And
3-1
that's
buy. It just
significant.
depends. And it's
Yeah.
significant because if you're a buyer who normally people buy houses when they have life-changing events, sometimes, whether you're having your family is growing.
Yeah.
So saving, whether it's $300, $500 a month,
Right.
it's a big help if you have to pay for daycare or
Right.
whatnot. People who are on commission, sometimes you have good months, sometimes you have bad months. If that payment can stay low for you, I'm a big advocate of those 2-1 buy down programs.
Yeah.
Um, and again, once interest rates do go down, you can refinance into
That
a
was going to be my
permanent.
question.
Mhm.
Right. Because let's say year two, you're saving year one, you're saving, hundreds of dollars, but now year two kicks in and you got a higher interest rate and those payments are higher, but now you don't have that extra income to cover it. What are your options?
You can refinance and you don't lose the money. So whatever the seller gave for that concession, let's say it's $10,000 and you still have left over $5,000, you can still apply those $5,000 to the new loan, whether it's to use it for your closing costs. Normally, that's what people do. They use that money for their closing costs.
Right. Okay.
And you don't
Yeah.
lose that money. The money is never lost.
Okay. Very good. So in conclusion, I guess we would wrap this up. So because we said we would do an hour,
Mhm.
is just to let buyers and sellers know that there's options out there for them, so they don't have to wait on buying their dream home or selling their current home for whatever reason. Like you said, life-changing events, whether it's a job relocation, a new baby coming, or also these multi-generational thing is happening where kids are moving back home or elderly parents are coming to live with you and you need more space,
Yes.
or sometimes the cousins are coming in from wherever they're coming in and they need a place until they get their own, and sometimes it's not just for 3 months, it could be a year, 2 years, 3 years before they get on their feet. So there's a lot of that happening as well. So it's a very dynamic market, a lot of different scenarios, and the overreaching theme here is we've got options, we've got solutions, and you got to reach out to your professionals, your real estate professional, your lending professional, and that's going to just make it for a smoother transaction.
And I encourage people to reach out to us. It's free. At the end of the day, questions are
Absolutely.
free. Getting pre-approved, it doesn't cost you anything to get pre-approved. It's,
Absolutely.
so I tell people reach out with any question you have. There's a misconception that you need 20% down to buy a property. We both know that's not true. I know there's a
Right.
lot of buyers out there that don't know, but
Right.
just reach out, have a conversation with a professional. Don't just take it because the neighbor told you or the
Exactly.
coworker told you. We have a lot of different programs to help different people. Everybody's situation is not the same. So I
And first step,
encourage
dial the
you,
number.
yes, I just encourage you to pick up the phone, reach out to Katia or reach out to myself. We're available. We give, and you have our cell phones.
Yeah, let's go ahead and give that information out, Eileen, and then I'll do mine.
Perfect. So if you want to reach out to me, my telephone number is area code 305-790-3143.
And what's the best time to reach you? Or do you have
It
limits,
does,
texting, email?
you're more than welcome to text that number, call that number. Again, time, day doesn't matter. It is my cell phone.
Okay, perfect. And for me, Kathia Green, my number is 954-372-0270. The best way to reach me is definitely call, but I take text messages, also WhatsApp. You can reach me
Yes.
on social media
Hmm.
as well,
Perfect.
direct messages on Instagram. It's Kathia Realtor. On Facebook, it's Kathia Green, Feels Like Home Team. I'm on TikTok. I'm also on LinkedIn, on Facebook, just everywhere. Just so
Everywhere, everywhere. Yes.
yeah, so just reach out and we're definitely here to help you. Guys, buyers, sellers, reach out to us. We're here to help you. It's Today is always the perfect day to get started. Don't wait until tomorrow, right?
Absolutely.
Right.
Absolutely. I like that. Today is the perfect day to get started, and it is always a good time to buy. I promise
It's
you, it is
always a
always a
good
good
time to
time to
buy.
buy.
Absolutely, absolutely. Eileen, thank you so much. And
Thank
oh, before
you.
we go, we're gonna have our next What Do You Want to Know Wednesdays on August 13th,
Correct. At the
right?
same time. So we're going to do
The
it
same
from
time,
12 to 1.
12 to 1.
We'll go ahead and put out more information, or if anybody that's interested and wants to know more about what we're going to be talking, or any questions that anybody has, just let us know.
Just let us know, definitely. And we'll have when we advertise this next event, we'll have a maybe a more specific topic, and
Yes,
but we'll also still take questions, and we'll try to fix this live, maybe go Instagram live the next one. So
that's what we need to do. Yes, we need to get the word out there so we can help more people become home
absolutely.
owners.
Tell a friend to tell a friend to tell a friend to tell a friend.
I love that. Yes. Well, it
Eileen,
was
thank
a
you so much.
pleasure.
It was a pleasure. Enjoy the rest of your day.
You do the same.
All right. Bye.